All right. So today's SPY was down 0.88%, and we did break out of that range between SPY 430 and 437. And I told you this was going to be a very simple market to trade as long as you had a very well-defined plan prepared for either scenario, and I still think that is the case. So the number one thing to pay attention to now is that I still do think that the favored scenario is going to be a Q4 rally, but a Q4 rally doesn't just go up in a straight line, and what we are likely getting now is this pullback before we continue higher, and then later in November we'll likely get another pullback until we fully reach that price target at 460. Now this is just the expectation while SPY is above a rising 200 daily moving average, and that is the last time we bounced on SPY was right there at 420, and now you can see that 200 daily moving average is still climbing and it's now sitting at 422. So for me, it is as simple as staying bullish above a rising 200 daily moving average. If you have a different plan, that's completely fine, but I'm going to walk you through how I view the market and how I would manage risk. And right now in the short term, if you are only a short-term trader and you do not like to swing trade over long periods of time, I do believe this is a risk-off market below SPY 430. Now, if you are a longer-term swing trader, you should stay long above the rising 200 daily moving average, or even more simple than that, just stay long above SPY 420, because if we break below SPY 420, we are likely getting another lower high within a bear trend, and we are going to much lower prices. So in my opinion, it is as simple as picking a side. If you are bearish, you can stay short as long as SPY is closing below 437. And if you are bullish, you can stay long as SPY is above 420. And then in the short term, the bears are winning because we did break down below the range at 430. And below the range, we have to respect the fact that price action is below all of the moving averages, which is obviously going to favor a bear trend. And then the confirmation of the bear trend will be the break of the rising 200 daily moving average and the loss of this critical support at 420. Also pay attention, we did get high volume selling today, which is no surprise because a lot of people likely got risk off below 430. And I do believe that's completely normal. I would have actually been more surprised if we had low volume on the break below 430. So from here, it is going to be the difference between whether or not this is a lower high right around SPY 437 and we're going into a bear trend, or if the market is actually just pulling back to try to put in a higher low before we continue a bull trend and break out of this downtrend from this correction. So there is still a very good chance this correction was a correction within a bull market. However, that is not going to be the case if SPY breaks down below 420. So we're going to know very, very soon which one is going to play out. And if you're a short-term trader, just remember this is risk off below SPY 430, and we did get that confirmation today with the close. The only way I would get back to being risk on from here if you're a short-term trader is if SPY immediately starts to bounce and closes back above 430. This was likely just a pullback and a quick liquidity grab below support before we go higher. So just to summarize, if you're long-term bullish, you're bullish above 420 in the rising 200 daily moving average. And if you're long-term bearish, you're staying short until we can close above SPY 437. Anything in between in short-term trading is risk off below 430 because there is a good chance we are going lower below 430. And if you're only a short-term trader, you do not want to get caught in a falling knife scenario. With high volume selling, it's always possible that's the scenario we find ourselves in. We just need more confirmation with tomorrow's price action. On the NASDAQ 100 triple Qs, we were down 0.94% today, and the triple Qs also closed down below all the moving averages. And if I zoom in here, you can see the 20 daily moving average is starting to become a positive slope, but price action did close down below it. And I did tell you if the Qs could not hold this critical support zone right around 360 to 362, it was going to look risk off. So we are now in that territory of risk off below SPY 430 and very close to risk off in the triple Qs below 360. So as I said in SPY's analysis, if the bulls do not start bouncing immediately out of this hole, it is going to look bearish. And in the triple Qs, the confirmation of a bear trend will be the breakdown below 355, and then this will look like a lower high rejection from the downtrending resistance trend line when we rejected on October 12th from that resistance level right around 373. So it is possible these are lower highs and lower lows developing, but we have no confirmation it's a lower low until we lose the critical support down here at 355. Below 355, we would go to 347 and then 337. And the bulls need to break back over 362 and try to get another higher high breakout above that resistance, which is going to be between 370 and 373. In the Dow Jones, we were down 0.75% today, and the Dow Jones rejected from that negatively sloping 50 EMA and resistance level at 341, which is a textbook rejection because that was the previous support back there in August, and now it's showing as resistance, which means we could be still in a bear trend. So in the Dow, you have to be risk off below 336, and the only way you should be getting more bullish is if we can start to close back over 336 or that 200 daily moving average above 338. The next downside target will be 331 and then 327. On the Russell 2000 IWM ETF, we were down 1.59% today, and the small caps did break down to a lower low from the lower high rejection because we did get that double top rejection from the resistance at 176, and you can see price action is below all of the moving averages. We're getting high volume selling on this break below 170, which means the next price target lower below 170 would be 164. Even though it is possible we could bounce up and retest that breakdown and then continue lower towards the price target. So IWM is looking risk off below all the moving averages, and the critical resistance here is 176, and we just broke down below the critical support at 170. So this is very clearly a strong bear trend trying to go lower, especially if we continue to close below 170 for another day. On the ARKK ETF, we were down 2.19%, and ARKK is still in this bear trend, and I told you the price target was the gap fill at 36, and we are now very close to filling that gap. That doesn't mean that's going to be the bottom, but that's definitely a point of interest we need to pay attention to. And you can see this is still bearish until we stop getting lower highs and lower lows, so do not expect a bull trend until price action confirms it. On the VIX, we were up 11.4% today, and the VIX finally got that close above 20, which means we could now be getting more of a bear market scenario if we lose all of these critical support levels and the VIX continues to close above 20. Now, typically the VIX does crush on Fridays, and tomorrow is a Friday, so pay attention to see if the VIX can close above 20 yet again. And if we do see the VIX closing above 20 with tomorrow's price action, this is going to be a very good indicator of a high fear environment, which could lead to some very high volume selling. So as I've said with the SPY analysis, below 430 is definitely signs to be risk off, and we're getting confirmation with that here in the VIX. On Bitcoin, we're currently up 1.3%, and Bitcoin is still holding that breakout above 28,000, which is very surprising because you wouldn't expect to see a risk-on asset like Bitcoin performing so well with the indices possibly getting ready to break down. This is a very clear breakout and retest of the breakout, and it's now bouncing and holding as support, and we're getting some decent high volume buying. So Bitcoin is looking bullish above 28,000, and it's only going to look more risk off if this fails and we can't hold above this breakout, and then we continue back lower. But so far, Bitcoin is looking bullish above 28,000. On Tesla stock, we were down 9.3% today, and Tesla did report earnings, and we did gap down, and we fully closed the gap to the downside below 218, and we're very close to the rising 200 daily moving average at 214. So if you're a very strong Tesla bull and you don't mind catching a falling knife, you would manage your risk right here between 214 and 217. Now we are very oversold, and we did open a gap to the upside, which is up there at 242. So I drew this out before, and I still think this is a great possibility that Tesla is reaching a bottom and will be done with its selling very soon. And then from here, we could still get a strong rally in Q4. Now, in order for this scenario to play out, we will need to hold this support at 214. And this is all bets off if we break below 214, because this will look like a lower high breakdown into a lower low. So if we cannot hold that critical support, look for lower prices, and the next lower prices would be that level right around 208 and then 197. So manage your risk as bulls right here at 214, and if we break below that, consider getting risk off because we're likely entering a bear trend. On Apple stock, we were down 0.22% today, and Apple is still doing exactly what I drew out, which was that rejection from 182, a pullback between 174 and 175, and then continuing higher towards the gap for that 191. So there's still reason to believe Apple could go higher, but if it breaks down below 174, then we'll be looking for the bearish scenario to go fill the gap below at 167. So this is not the scenario I prefer until we break below the support at 174. So as long as we're above 174, I still believe we are going higher in Apple stock. So jumping back over to the S&P 500, we're very close to knowing if this is a lower high rejection into another lower low, because we're either going to break down below the 200 daily moving average at 422 or that critical support at 420. But as long as we are above this support, do not rule out the possibility this is simply just a pullback and trying to form a higher low before we continue the rally to break out of this downtrending correction. As I've said many times, I believe this is a correction within a bull market, and the only thing that is going to change that is the price action breaking down through that critical support at 420 and invalidating that as the likely scenario. So it's a very simple trade plan. You simply need to be patient, have great discipline, and understand both scenarios. And as long as you're prepared for either scenario, all you need to do is let the price action do all the talking from there. If you want to crush this market, consider joining the Stock Channel Discord or Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.